welcome to Financial Fridays. I will be your host today, Daniel Guinness. I'm a law clerk at Betts Law Company, and with my guest today, Sasha Savic from Felix Partners. Sasha Savic is a proficient tax professional, and he is joined us today to discuss the ATO new initiative called Justified Trusts Program. And I'm sure you're going to enlighten us with all the new kind of compliance regulations that are coming in for different type of companies and what that's kind of going to require and look like.
Thanks, Daniel. Thanks very much for having me again. So over the next 10 to 15 minutes, we'll delve deeper into the program. I'll probably maybe set some background to say that the program itself, it's not brand new. It's been around for a while. And it's probably an evolution of different types of programs that ATO's had over a number of years. So essentially, the way to think about it, a lowest common denominator is, is the taxpayer paying the right amount of tax? That's what the ATO wants to ensure on behalf of the community as the administrator of the tax law, right? So really the focus of these programs is to, there's a couple of different facets. One is your accuracy of your income tax and GST returns. Yeah. The other one is your international related party dealing, so transactions with entities in other jurisdictions where there's common ownership. And the third one is the risk governance. So they're probably the core part of the program. When ATO decides to look at taxpayers' affairs, they're the sort of things they'll be looking at. It applies to groups of 250 million or more turnover. So when we say that, what we mean by that is that those are the target groups for this particular program, but it doesn't necessarily mean that other taxpayers won't be looked into. Yeah. It just means that any group that's in 250 or over will fall under the Justified Trust program, which has got a lot more formality to it. It includes streamlined assurance review, which is a very structured process, which the ATO announces by contacting a taxpayer and then has a series of requests for information. Mm-hmm. And essentially at the end of that review, once it concludes, they can go anywhere from 3 months up to 18 months, the taxpayer gets assigned the rating. So if the assurance is high, they're essentially left to their own devices to focus on their business. The ATO may come back in years to come. Yeah. If the ratings are low or medium, generally there's a follow-up and the taxpayer will be subject to an ongoing review and will need to fulfill certain requirements in order to get to perhaps a higher rating.
So actually on that, let's say you are advising a company, right, and you want to ensure that they actually are provided with a high rating. What would kind of be your, suggestions or advice for a company in this threshold to prepare for the probability of maybe getting a review in this program? What steps can they practically take to make sure that they're prepared when the ATO comes knocking on their door?
Yeah, that's a really good question. And that's where I think, a lot of taxpayers get caught out because these reviews, let's put it, for an ordinary company trying to focus on its own business, trying to get customers, grow their revenue, profitability, all of that sort of stuff, audits and reviews can be very costly. Once we start dealing with the administrator, the ATO, we're bombarded with various requests for information. So what can we do to actually prevent that? Well, key thing is preparation, being aware of the requirements, pretty much putting together the appropriate documentation before these types of requests actually come in. So following the appropriate guides that have been issued for taxpayers, whether across income tax, GST, or risk and governance frameworks, and making sure that they follow ATO's PCGs or the practical compliance guidelines, which in a nutshell set the expectation of what the ATO expects the taxpayer to do. So we've sort of moved from a setting where good intentions are okay, maybe worked 10, 15, 20 years ago, to a setting where the ATO does actually expect the taxpayer to conform to a certain level of documentation in addition to that tax return. So just lodging a tax return is probably not good enough. Yeah. If you're in that bracket, 250 or over, and again, we spoke about the formality of the program, that's when you really start that's when the ATO really starts to expect a lot more from individual taxpayers. Yeah. So preparation is key. Consulting someone who can actually guide them, who can prepare these things before they get hit with a review letter. And what we have found in practice is that taxpayers that adopt that approach save a lot of time and resources down the track.
Yeah, so really based off the turnover amount, there's just comes this expectation that you're turning over 250 million more, and that kind of carries on with a expectation to have your affairs in order. And I guess the best approach for that potential enforcement with the ATO is just to make sure you consult with the right people and ensure that you're very compliant when that day comes.
Yeah, that's right. It's really keeping that documentation in check. ATO uses various techniques nowadays. They've obviously got an insight of your tax return. When you lodge your tax return, they've got that set of data. They can look at that and scrutinise that. But they also use other parameters. So it's very data-driven in today's world. So there's a lot that happens in the background in terms of interrogating different sets of data that you submit or that are publicly available for the industry. And, the ATO's capabilities are quite high in that area where they can identify certain trends and anomalies, and that can trigger reviews. Other trigger for reviews can be losses, sustained losses over a number of years, which potentially are the ATO's views unjustified. So they always want to know more why you're in losses. Mm-hmm. We spoke about transfer pricing. They're very keen to ensure that if you do have transfer pricing dealings, transfer pricing being, just to explain it in very, very simple terms, I'm a company in Australia. I'm owned by a multinational subsidiary in Singapore, and I do a lot of trade with them. There's a lot of transactional exchange. Yeah. So what we need to make sure in those instances is that transfer price is at arm's length. So essentially ensuring that we're paying the fair share of tax in Australia. We're not shifting profit across the board.
Yeah. So I guess I found that interesting. You kind of have conveyed that the ATO has a bit of an attitude shift in the way they're kind of approaching enforcement of their regulation. Now, maybe not to dwell too much on the actual organization's perspective, but so do you want to maybe kind of explain how and why maybe their kind of attitude has become a bit more compliant heavy and a bit more less understanding, but more of an enforcement perspective?
Yeah, no, it's a very, very relevant area probably for a lot of listeners, because we're all part of the economy, right? We all want to live in an environment which is less taxing, so we've got more disposable income. So everyone wants that. Everyone wants more cash in their pocket. At the same time, the ATO, which runs the tax affairs on behalf of the government as a government agency, needs to collect the right amount of money to run the economy, right? So that's where it's almost like you look at it as a P&L setting. Yeah, if you run a small milk bar, you've got your income and your expenses. So tax is essentially income for the government, and ATO needs to ensure we pay the fair amount of tax. So they sort of, in a nutshell, have got the responsibility back to the community. Yeah. If you look at it, it's sort of almost like a pub test. We're having a beer on a Friday night, and you come up to me and say, yeah, look, I run a multinational and we've got a turnover of $15 billion. And, but by the way, last 10 years, we've been in losses. We've paid nil tax, yeah? Yeah. So what's going to be your...
it's concerning.
What's going to be your comeback? You're going to say, yeah, look, that might be right in terms of your lodgements, but does it feel right? Yeah. And that's kind of where the ATO is coming. They want to make sure that taxpayers are paying a fair share of tax. Yeah, so it's not too little or too much. It's a fair share of tax, and that's why I think you've got these programs. So recently in the budget, we've had some announcements. Budget was quite plain in terms of broader tax reform, but we did have some announcements around increased scrutiny, and I think in actual fact they're going to boost the resources by about $580 million or so, which will give ATO essentially more power, more resourcing to go and conduct these reviews and ensure the taxpayers are paying a fair share of tax. Yeah. So let's not forget, under the legislation, ATO can actually come in and they can adjust returns. Yeah. So if they perform one of these reviews and your processes and your accuracy information on what you've submitted does not prove to be accurate, does not prove to conform with the letter of the law, or you don't have the appropriate documentation, they can either enforce the documentation be maintained going forward, or they can even adjust the return in very sort of extreme circumstances. And we spoke about transfer pricing, we spoke about some of the other kind of deductions that people take up. So, going back to kind of sum up, where we're at, it's really ensuring that from a community perspective, they can demonstrate they're doing everything they can to ensure that the right amount of money ends up in the government coffers.
Yeah, so they're really, from a business perspective, you want to get it right. You don't really want to, I guess, mess around with this, because then you're going to be classified in a disadvantaged rating, and that's going to be stuck with your business going forward. So I guess at Felix Partners, if you have that in mind, right, you're trying to guide your client to ensure that they have a high rating going forward. What are kind of some of the techniques you could introduce proactively? If a client comes to you and says, I'm concerned about this rating, what's your kind of strategy in that?
Yeah, so what we like to do is, so taxpayers are required to submit lodgements. They need to lodge their BASs monthly, they need to do their tax returns, they need to do their transfer pricing schedules. All of these things are non-negotiable, so they have to do that. We think a really good check-in point is when they do some of those lodgements, is to look at the justified program, understand what the expectations are, and have a plan in place to start putting in, documentation, with a view that at some point in time they'll have to answer to the ATO. I think that's the best position to be in.
Yeah.
And it does prove to be the most cost-effective way to kind of manage your tax affairs overall. We've found with some of our clients, using that type of approach does save time and money down the track. When you're not under review, you can much more easily set your processes to align with the letter of the law and with the expectations of the ATO. You can conduct, gap analysis. You can put procedures, processes in place. You can get your governance, your board reporting. We've seen clients where the ATO comes in and none of that stuff is in place.
Yeah.
And the review ends up with, not just a low rating. Let's not just focus on the words low, medium, or high, but what it actually means is that you've got so much more work to do.
Yeah.
You're going to be constantly scrutinised, and you're going to be flagged on a register to follow up.
Yeah.
Over the next few years. So again, I can't reiterate enough how important planning and early engagement is, because that's where you can really earn a lot of brownie points, and you're super well prepared when that inquiry does come through.
Yeah, I think we kind of convey that as in this law firm as the proactive versus reactive kind of approach. Being proactive is going to actually save you so much time and resources and energy going forward, although it does take a bit of effort prior to the actual kind of endpoint, rather than being reactive where you're kind of just letting things slowly slide and subdue, and then in a year or two it's created such a mess. So just reiterating that point that part of being professional in professional services is to ensure that you're being proactive for your client, and you kind of explain how important that is. And clearly you explained it very well, because not to dwell on the ratings, but really it just means if you are in the low to medium rating, you're going to be required to do a lot more follow-up work in the coming 5 to 10 years. So it's really in a client's best interest to undergo your services and ensure that they're intact potentially for a ATO to knock on their door.
Yeah, look, I couldn't agree more with you. I think you're right on the money. When you say those things, and we're here to help. We see many different scenarios out there that pan out as a result of the reviews. And look, putting it simply, Daniel, no one likes to do more work, right? No one wants to do more compliance.
Yeah,
so we all want to comply and just put it to bed and just do bigger and better things in our business. But part of this process that we do at Felix Partners is to really educate taxpayers around what those obligations are, and to take some of the heat off in terms of how we think they can comply. And we have found that early engagement and being proactive with those affairs goes a long way.
Yeah, definitely. Is there any kind of other things you'd like to mention or comment on?
Yeah, look, I'd probably say that just to kind of wrap it up, what we can do for your listeners, if someone's in need or just wants to consult, we offer a free strategy session. They can reach out to us. We can organise a face-to-face or a video hookup, and we can do essentially a no cost obligation scan of their tax affairs. Give them a dashboard in terms of where we think they sit on the risk differentiation framework, and from there work out an action plan. It's entirely up to them whether they want to pursue that and when. And I think it's a good thing to have, even if you're going to put it on the shelf. Talk to your CEO, talk to your CEO, and that way at least they're informed.
Yeah.
At least the board's informed. They know what they're looking at. So further down the track, they can decide they want to go down this path and prepare, or they want to live with the risk. That's okay. We all have different risk appetites, but we spoke about the approach we prefer to see with taxpayers, but ultimately it's up to the taxpayer how they kind of manage those affairs themselves.
Yeah, great. That sounds incredibly valuable. That's very nice. Okay, great. I just want to say thank you for coming in today. It was a pleasure to discuss these new reforms with you, and I look forward to future podcasts.
Excellent. Thanks very much for having me.
Of course.